Hello, and welcome to Money 2.0. My name is Lee, and would you kindly introduce yourself and tell us about what you do?
Sure. My name is Alecia Bolton. I have a company called Magpie Investments that is a private equity firm investing in first position performing and non-performing mortgage notes.
Wonderful. And tell us about how you got started in starting during a pandemic.
So I've been in the real estate space for about 8 years, investing in more traditional real estate, single family homes, rentals, that sort of thing. And I wasn't enjoying it as much as I could. It wasn't as lucrative as I was hoping it would be. I found mortgage notes kind of by accident. I had purchased a piece of land at tax auction and decided to sell it to the neighbor and created a mortgage note. So I sold it, created a note. I've been getting monthly payments ever since, and I was hooked. It's a safer space than rentals because you don't have to deal with a tenant.
So true.
The borrowers are more responsible for paying the taxes and their insurance and everything. So it's a bit more of a hands-off, lower risk investing situation. I did start this during a pandemic. And one of the great things about that, not saying the pandemic was great at all, but everything went online. So a lot of the training and the networking and the meeting went online, and that really allowed me to grow my business at a rate that I wouldn't have been able to without having to travel a lot before the pandemic happened. I've started Magpie Investments, and then I partnered with 3 other people. We have a booth here at the convention to be able to reach a broader market, and that's 4-1 Capital Partners.
And that is based out of?
We're all over the country, which is again a
Right.
good thing about the pandemic, is I never would have met these people if the pandemic hadn't happened. So it was definitely a silver lining to everything that happened.
Great, so you're not limited. And do you have any advice on managing risk and note investing?
Sure. So with note investing, with a lot of real estate, all of your money is made when you buy the asset. So your underwriting and your due diligence when you're looking at the asset is what's really important. I've actually done very well for myself with my underwriting criteria, and I'm working on creating a piece of software so that I can share that with other people and allow them to access to my techniques as well.
Wonderful, looking forward to that. And what can you tell us about your due diligence software?
So the software is going to be web-based. It's going to be at the very beginning of your due diligence process. So it's going to look at the asset itself, what type of asset it is, single family, commercial, what the makeup of the asset is, kind of get the area around it at a very high level, and it'll allow you to store all of the assets you've looked at so you can have a reference if something comes up later, and also kind of be able to make criteria for yourself. I only want to look at things where there's going to be a 20% return in the worst case scenario, and quickly analyze which assets you want to spend your time on.
And then what avenue would that what avenue would that software be available? How would people find out about your software?
So it'll be associated on my website. I will probably end up going out on kind of a road show to conventions such as this to let people know. There are note-specific conventions that I would be attending to get that message out there.
Great. And how can note investing reach communities that were previously left out of wealth growth?
So wealth growth and real estate are really one and the same. That's traditionally the best way to grow your wealth is to invest in real estate. Mortgage notes allow you to come in at a very low investment rate. I've bought notes for $5,000 that have been very profitable, but it also allows you to have a direct impact on communities that are lower income, that have been left out of the wealth growth because they haven't been able to afford their own house. And because you're essentially operating as the bank, you're allowed to make decisions to give a little more leeway to people who don't have good credit but have good stable jobs, or who don't have reliable income but have had income on a reliable scale for 2 years. So your criteria is a lot more relaxed than a bank, and you're able to offer those houses to people who might not be able to get traditional financing.
Wow, that is definitely attractive in today's market for many. And can you tell us how Magpie Investment work with people that may have been previously left out of wealth growth? So how would they work with
So a lot of real estate investments, syndications and whatnot, you have to be an accredited investor, which means you have to have a very high net worth or a very high income. A lot of people want to invest in real estate, but they only have $5,000, $10,000, and there's no place for them to put that in a lot of traditional real estate investing. Mortgage notes allows you to have that because there are notes on the secondary market that are at the $5,000 and $10,000 price points.
Interesting. Thank you for sharing. And could you elaborate on how your experience has been so far? This is your first
This is my first Money 2.0 conference. It's been great. The speakers have been really informative. I'm very interested in how many different exhibitioners are here. There's the healthcare and the internet, and a lot of very interesting things are happening in the marketplace right now.
Wonderful. Well, thank you so much for joining us. It's been a pleasure speaking with you today. We look forward to hearing more from you this week, and enjoy Vegas.
Thank you.
Thank you.